Hey everyone, welcome back to Corporate Decoder, the place where we decode the financial world, one filing at a time. And believe me, this one is a real roller coaster that might just leave you wondering if the company is playing with more than just software. Today we are diving deep into a registration statement filed by Smith Micro Software Incorporated, a company that dabbles in mobile solutions. This isn't just any filing though. Folks, it is a game of catch up and a look at what could be a significant number of shares hitting the market. Stick around, because we're going to break down what this means for investors and the company's future. And hey, if you like getting these kinds of insights without the jargon, make sure you are subscribed. We also have a Discord community linked in the description for even more in-depth discussions, so come join us. Alright, let's get straight to it. This document is essentially a registration statement, Form S-1, indicating Smith Micro Software Incorporated is looking to either register more shares for an offering or update previous ones. It is a bit of a combined prospectus, meaning it is merging information from an older filing to cover new shares that can be issued. Mainly through the exercise of warrants, think of it as adding new chapters to an existing story, but the publisher wants to make sure everyone knows what is in the new bits before they're sold. This filing is on behalf of selling stockholders, which means the company itself isn't directly selling shares to raise money right now, but rather enabling existing holders of warrants to sell the underlying stock. So what are we talking about here? We're looking at shares that can come from exercising warrants. These warrants were issued in various deals throughout 2025. For example, there are July warrants that were originally for a certain number of shares, but due to anti-dilution adjustments, now represent up to an additional 1272436 shares. Then there are the 11th of September warrants and the 29th of September warrants, also linked to note purchase agreements. And let's not forget the November private placement transaction, which includes both shares sold directly and more warrants, called private placement warrants and November warrants. In total, we're seeing a potential of over 9 million shares of common stock being registered for resale, which could significantly increase the number of shares available for trading. Now let's talk about the numbers beyond just shares to be sold. As of early December 2025, there were about 25.2 million shares of common stock outstanding. If all the warrants mentioned were exercised, that number could jump to over 32 million shares. This is crucial because it directly impacts dilution, which is when your ownership percentage in the company shrinks as more shares are issued. While Smith Micro isn't getting the money from the sale of these shares, they could potentially receive a hefty sum if these warrants are exercised for cash. We're talking about up to $4.71 million based on the current exercise prices. However, the big question is, will they be exercised? And at what price? That depends a lot on the stock price and the terms of those warrants. Now, it is not all smooth sailing for Smith Micro. This filing also touches on some recent developments, including a rather concerning notice from Nasdaq. Back in June 2025, they received a minimum bid price notice. This means the closing bid price of their stock had been below $1 for 30 consecutive business days. They've been given a grace period to get back above that dollar mark. If they don't, they could face delisting. This is a pretty serious red flag for investors, as it often indicates underlying business problems or a lack of market confidence. Let's dive into the details of some of these offerings that led to these warrants. In July 2025, they had a registered direct offering where they sold shares and in a concurrent private placement sold these July warrants. These warrants had an initial exercise price of $1.2, but due to anti-dilution clauses, the exercise price has been adjusted to $0.6708. This clause is designed to protect warrant holders if the company issues stock at a lower price, essentially adjusting the warrant's terms to their favor. It is a common feature in these types of deals, but it definitely means more potential dilution for existing shareholders down the line. The November transactions are where things pick up pace. On the 5th of November 2025, they had another registered direct offering for shares at $0.6708 per S-share, and a concurrent private placement issuing more warrants at the same exercise price. Separately, on the same day, they also did a private placement for shares and private placement warrants at $0.6708 per S-share with a trust where the CEO is a co-trustee. The proceeds from these November deals were around $2.65 million before expenses. This highlights a consistent pattern of issuing shares and warrants, often at prices that reflect the current market value and sometimes adjusted downwards. Now, who are these selling stockholders? The table here shows a pretty diverse group, from investment funds like Iroquois Master Fund Limited and Anson Investments Master Fund LP, to individuals like William W. Smith Jr., the CEO William W. Smith Jr. and Diava L. Smith as co-trustees UA the 30th of November 2021, Smith Living Trust. This table shows their beneficial ownership before and after the offering and the percentage of the company they would hold. It's important to note the beneficial ownership limitations often set at 4.99% or 9.99%, which prevent any single entity from owning too large a chunk of the company at once. These limitations are key to managing dilution and regulatory compliance. For instance, Anson Investments Master Fund LP is looking at a potential 9.0% ownership, while the CEO's trust is listed with a significant 23.5%. Showing the concentration of ownership among some of these key players. Looking at the table after the offering, we see different percentages of beneficial ownership. For example, Anson Investments Master Fund LP, after potentially selling shares, could still hold 9.0% of the company's stock. This indicates a significant ongoing interest from these major holders. The CEO's trust, William W. Smith, Jr. and Dieva L. Smith as co-trustees, UA the 30th of November 2021. Smith Living Trust is listed with a 23.5% ownership after the offering, which highlights the substantial stake held by the leadership. So how will these shares be sold? The plan of distribution is pretty standard for this kind of offering. The selling stockholders can sell their shares through various methods on the Nasdaq Capital Market or in private transactions. They can sell at market prices, negotiated prices, or through broker-dealers. The key takeaway here is that Smith Micro itself will not receive any proceeds from these sales, but the company is facilitating the resale of shares by these existing warrant holders. They can use any method allowed by law, including outright sales, block trades, or even through options and hedging transactions. This shows a lot of flexibility for the sellers to liquidate their holdings as they see fit, which can put pressure on the stock price depending on the volume and timing. Our take on Smith Micro Software Incorporated's latest filing is that it paints a picture of a company operating in a dynamic but challenging market. On one hand, they're actively trying to raise capital and facilitate liquidity for their investors through these warrant exercises and resales. The continuous issuance and adjustment of warrants, however, especially with those anti-dilution clauses, does raise concerns about potential significant dilution for existing shareholders. The Nasdaq minimum bid price issue is a serious short-term risk that needs immediate attention. Investors should be aware that the company's ability to get back above that dollar threshold is critical for its continued listing. The company's strategy seems to be centered around its SafePath and CommSuite products, aiming to tap into the growing demand for digital lifestyle services and enhanced mobile experiences. Yet, the competitive landscape is fierce, and their reliance on a few large mobile carriers poses a significant customer concentration risk, as highlighted in their risk factors. While the potential for millions in proceeds from warrant exercises exists, it is contingent on market conditions and the company's stock performance, which is currently precarious given the Nasdaq issue. In conclusion, Smith Micro seems to be in a phase of restructuring and managing its existing obligations, particularly those related to warrants. The path ahead is uncertain, with both opportunities in niche mobile markets and significant risks tied to its stock price, potential dilution, and competitive pressures. It is a situation that demands close monitoring by any investor. Alright, that is our deep dive into Smith Micro Software Incorporated's latest -1 filing. What do you think about the potential for these shares to hit the market and the impact on the company? Let us know your thoughts in the comments below. If you found this analysis valuable, please hit that like button, it really helps us out, and subscribe for more in-depth corporate breakdowns. And don't forget to check out our Discord community linked in the description for ongoing discussions. Thanks for watching, and we'll see you in the next video.